start the evening, I would like to extend a very warm and sincere welcome to our two guests, Dr. Donald Kohn, currently Senior Fellow at Hutchins Center on Fiscal and Monetary Policy at Brookings, but formerly Vice Chair of the Federal Reserve in the United States from 2006 to 2010. Accompanying him is our guest from Canada, Dr. Paul Beaudry, currently Professor of Economics at the UBC's Vancouver School of Economics and a former Deputy Governor of the Bank of Canada from 2019 to 2023. So our guests this evening are both central bankers, and central banking is a vital national interest to not just Canada and the United States, but to every state. And just to make sure we're all reading off the same page, we previously ran a series of seminars on national security strategies. And one of the purposes of a national security strategy is to advance and protect vital national interests. One of those vital interests I suggested was the independence of a central bank. But a couple of weeks ago, when Don and Paul and Angela and I were doing preparatory work, Don said, independence really isn't that important. What's more important is price stability. And I stand corrected, though I'll ask, if you don't have independence, you might not have price stability, but we can get into that later this evening. But with that introduction, I would like to turn the floor over to our guests for a genuine fireside chat. And maybe you two gentlemen can begin by, in 3 words or less, saying, what is a central bank and why is it important before we launch into the independence or not of a central bank? Gentlemen, the floor is yours.
You want to begin, Paul?
Sure. Well, central bank is, the basic idea is in most of our modern economies, we only have one currency, and there's only one place that can kind of put out that currency, and that's the central bank. And it's a particular power to have that capacity to put out currency, and kind of, it's with all the aspects. Now, obviously, the way central banks work now is really on fixing interest rates, but to kind of think about it at the basis is kind of remembering it really is this power of who can put out currency and having an institution that's kind of in charge of that. Obviously, in previous times, there was a lot of different institutions that could put out currency, and there was problems associated with that. And that's why central banks were formed, to kind of reduce those problems. And particularly now, we think about the central banks as playing an important role, as you were discussing, in particular of doing whatever it does to favor this price stability as one of the main parts there. So I'll let Don kind of jump in, see if he agrees with the way I kind of narrowed in a few words what the central bank might be.
Sure, Paul. I agree with what you said. I think the important thing is that governments have given central banks authority to help balance the economy, to stabilize the economy and the price level, and important authorities over financial stability in many cases. So it's not the only thing that affects economic and financial stability, but it's got a very, very important lever, and that's to control the money supply, or as Paul said, these days, really control over interest rates.
Is there a role for rule of law in the independence of central banks? Are there statutory provisions which go towards enhancing the independence of a central bank?
Well, I'll start with the United States and the Federal Reserve, and the answer to that is yes. There are very important laws in which Congress set up an institution that had some independence from short-term political pressure, and we'll get into later why that's so important. One of those laws is the people who sit on the Federal Reserve Board, who make decisions about interest rates and trying to stabilize the economy and financial markets, are appointed for 14-year terms. So they gave them long terms. They're appointed by the president and approved by the Senate, long overlapping terms. So that meant that that a president couldn't appoint a whole bunch of people at the same time and take control of the institution. That's an important part of independence. Another important part of independence in the United States is the Fed has budgetary independence. It finances itself out of the income that it creates in large part, at least in the old days, what Paul was saying, issuing the currency, and it holds securities against that currency and earns income on those securities. It doesn't pay any interest on the currency. That's called seigniorage. And it uses that income to meet its expenses, which are a small fraction of that income, and then it returns the rest to the Treasury Department. And the Fed also, Congress in 1913, very carefully set up a federal system. So there's a center of the Fed in Washington, the Federal Reserve Board, 7 members. Everybody reads about the chair all the time, but there really are 6 other people on that board. But it also set up 12 reserve banks, so 12 regional entities of the Federal Reserve. And those 12 banks have presidents, CEOs of the 12 banks that are appointed by the board of directors with the approval of the board of governors in Washington. And those 12 people come to Washington 8 times a year and interact with the Federal Reserve Board and make decisions about monetary policy, about what's necessary for the stability of the economy. And that's an important part of independence, because those people aren't even appointed by the president. They're appointed by the boards of directors with the approval of the Federal Reserve Board, which is appointed by the president, and they bring independent views on what monetary policy should be. So there are a number of ways that Congress said, we understand that we can't really be trusted with making these decisions on a short-term basis. We're going to set up an entity that that has some protections against the short-term political pressure. That doesn't mean they're always happy about that. There's often pressure on the Federal Reserve. We'll get into that later, but there are important legal safeguards. It is also true that I think norms and practices over time have protected Federal Reserve central bank independence. Not all laws. It's also an understanding by the people involved that independence is important.
Paul, what's the Canadian line on this?
I'm going to take two parts to there. So obviously the law part is important, and so there's the Bank of Canada Act and everything. But I think I want to emphasize the other part, which is there's also conventions. And in the Canadian case, on top of the actual law, which is kind of, there is the Bank of Canada Act and everything that it says, but there's a lot of things that we work also on conventions. So in particular in Canada, we have a convention that every 5 years we go through a framework review. And this is a very important part where there's a discussion, basically the Bank of Canada with the Ministry of Finance, kind of discussing what the next 5 years, what will be the mandate of the central bank and how it'll work for that part. Over those 5 years, then the bank becomes independent as implementing that part of the mandate. So that's actually not in the Act itself. This is the convention of how it works in Canada, and those are as important. In many ways, conventions are as important for how things work, although at the same time, they have a little bit more fragility because they could break down. But that's a very important part of understanding. It's both an aspect of both the law and certain conventions that kind of govern the overall functioning of how the Bank of Canada functions.
Don, you mentioned there are 12 regional banks. Do they reflect regional economic conditions? No, why 12 and not 13 or 11? And if you were to map them out, are they concentrated anywhere in particular?
Yes, I mean, this was set up in 1914. Actually, the Federal Reserve Act was passed in 1913, and the districts were set up in 1914 or 15, I think, 1914, I believe. So it really reflects the pattern of economic activity in 1914. and was heavily concentrated on the East Coast. There is one. There are and in the Midwest. There are actually two reserve banks in Missouri. One in St. Louis on one side of the state, and one in Kansas City on the other side of the state. I always thought that was strange, but someone told me there was a very influential senator from Missouri, so that might explain some of it. This Federal Reserve Bank of San Francisco covers a huge area and very, very important economic activity, and not only an area wise, but activity wise. So there's a lot. It's the reserve banks are not well distributed relative to economic activity.
Is there a case in Canada, Paul? Or could you make a case for regional banks along the lines of what we see in the States? I mean,
No, I don't think you'd want to think along the, well, there's two parts. So first of all, what you want to have is regional input. Okay, so you want to have representation of getting those aspects, because the reality is, there's a set of decisions. These are national decisions that kind of come in, and so there's, the tools are national level. So you want to have input in the aspects that comes. So you're covering the country. Right now, at the in the Canadian case, there is regional offices across the country at different. So there's a Vancouver office, there's a Calgary office, there's a Toronto office, there's a Montreal office, and then there's a one in the Maritimes. So there's a kind of representation. That's one way of getting this information in. And I do think that's important, of trying to find ways of getting the information that's locally. I don't think of kind of changing to a regional system, given our structure, would be very helpful. But I do think that, what you don't want it to be too much like Ottawa centric. It's only the ideas in Ottawa and kind of like that, that aspect. So it's very important to bring ideas in. And I think that's really where a lot of the input is coming in the US system, is to kind of get that part of getting some regional information. And so there could be arguments in the Canadian case of finding, let's say, on the board of kind of the aspects of having the deputy governors, you could think, maybe it should reflect that regional part. And I would think that's a more important part than thinking of trying to do something that would resemble the US. It's a very complicated system, the local reserve bank system in the US. So maybe Don wants to say something more on that line.
Well, I think, Paul, you've raised a very good point. The reserve banks are really information conveyance mechanisms. So they bring in what's happening in the region, and most of them have national and international businesses headquartered in the region, and the presidents talk to those businesses, unions, nonprofits, et cetera, that are not, have footprints outside the region. So they bring that information in, but also importantly, they convey information into the region. So they represent the Federal Reserve, and they try to explain why the policy, the Federal Reserve, why it's doing what it's doing, and how the Fed sees the economy developing, and how policy might react to changes in those economic developments. So that's a very important function. I would say the other function they serve, Paul, is that they each have research staffs. So when a Reserve Bank president comes to an open market committee meeting, which is the policy-making board, they come equipped with an analysis that their staff produces, and they're not totally dependent on the staff at the Board of Governors. So I think that helps with the diversity of views on that are brought to the policy process.
Just to follow up on that, that's one of the things that, again, in Canada, there could be maybe more gain on that part, because we have these regional offices, and there is some research in those regional, but most of it is very dominant in Ottawa. And so there's maybe less room to have some of this variety of views. Now there's a new process of having external deputy governors at the Bank of Canada, so that these are ones that aren't actually staff at the Bank of Canada. They're only partial there, which is a bit like Don did in the UK. I guess you were on the external committee there. So the UK has that same structure of having external deputy governors as one way of bringing in outside and kind of potentially different views and helping that diversity in the debates around how to do monetary policy.
Paul, is that a recent development?
The idea of having, yes, so it's only been 3 years now that there's been externals at the Bank of Canada. And yes, it was very much a little bit of the reflection of whether it was true or not. There was kind of, criticisms during the COVID period of whether there was too much kind of groupthink. A lot of central banks got criticisms from many fronts. Whether it was true or not, we could debate that. But I do think it pushed to kind of open up and say, regardless, having some externals that are less kind of tied into the Ottawa central part and being as employees of that, and very much tied to the research part there, trying to expand it and bring in some kind of externals was one of the aspects to, again, have more regional input, have more variety of ideas around the table, trying to get some things along that line.
Don, you spent some time concerning the Bank of England. If we can broaden this evening's context, can you speak to what is the model in Bank of England?
Well, it's very much like what Paul was describing. So each committee, I was on a financial stability committee called the Financial Policy Committee. There is a monetary policy committee. And in both cases, there's a majority of people who are part of the structure of the bank, but there's a large minority, of which I was one, that aren't part of the bank structure, were brought in as external members. And we are tasked with bringing our independent views to bear, especially on the Monetary Policy Committee. Parliament monitors this very carefully. And there's a strong push in monetary policy that you have your individual views and you take responsibility and accountability for those views. And there's much less of a sense of everybody trying to form a consensus, which often happens at the Federal Reserve. So I like the external member idea. I view the Reserve Bank presidents basically as external members of the Federal Open Market Committee.
So just to kind of add there, just because of in between, and I think the comparison exactly of seeing the Bank of Canada relative to the Bank of England and the Fed. So it's a bit of a middle aspect. Even though there's these external members right now, it's still a very consensus-based system at the Bank of Canada. So it really is that still, even for the external members, they're kind of brought in, there's the discussion, and what goes out is pretty much the idea of kind of bringing in a very consensus view. And it's also not the convention of the externals to go out and give kind of independent outside kind of very different views. So it's really to share within, but not outside. So it's kind of somewhere in between. It still has very much the consensus part that at least the Fed has had traditionally, even if it's brought in some of these external members. So it's not quite working like the Bank of England, which is kind of very different, which really has the externals taking and kind of accounting for their views and kind of sometimes really voicing their disagreement with the governor.
Well, let me put a question to both of you and broaden the context even further. We talk about the European Central Bank and the pressures that Christine Lagarde faces as its president. Do either of you have any visibility or informed opinion on the problems or the challenges that she may face concerning independence of the ECB?
Well, the ECB's independence is guaranteed by treaty. So it's not even a law. It's a treaty. And it can't really be changed except by agreement of everybody. So there's a real sense in which in the United States, and I suppose in Canada as well, kind of the Parliament and Congress in the United States Congress could change we talked about the laws, they could be changed. That really can't happen in Europe. So the ECB it's a more difficult job in the sense that it's not really a unified market, particularly not a unified financial market. So and right now they're very much exposed to the energy shock, much more exposed than Canada or the United States. So there there are challenges in Europe, but independence really isn't one of those challenges.
And I'd even go a bit further there, Lawrence. It's so independent. If anything, people would kind of argue maybe it takes on more of the role than what it was kind of thought to begin with, which is a very different argument. It's such a possibility of doing things, how much it can extend its own kind of view of what its mandate is. Sometimes there's kind of an argument of mission creep at the ECB, and it's very hard to stop because exactly like Don said, it's a very independent institution. So I don't think, and you think about there's lots of problems of kind of how it works. There's lots of heterogeneity. It has a lot of countries. It has a lot of people in there to kind of work with. But I don't think independence is the problem, but kind of keeping it focused on what it's supposed to do. Sometimes some people at least would say there's a potential problem there.
Yeah. Well, just follow up on that point. I believe there are 27 member states in the EU. I don't believe all of them are part of the ECB. But for those that are there, is there a regional representation? The economies of Slovenia going to be quite different than the economy of Germany. Do we know? Sorry,
the central bank, the governors of those. So each of those countries has a central bank. And although now those central banks, Paul noted at the beginning, there was a congruence between the currency and the central bank. In those cases, there isn't. But those central banks all send their governors to the meetings in Frankfurt, I think also 8 times a year. I'm not sure how often. And so, yes, so they're well represented. The interests of the various regions are well represented in Frankfurt at the ECB meetings.
And I don't know if you'd agree, Don, but it's in some sense now what we call the central banks in all these countries are much more kind of similar to regional feds in many ways. Yes. And so it is a system that, although the overall market is not all unified, but in some sense, it's a system that kind of reflects that same structure, that these are basically regional kind of, representations of the ECB. It's right. No longer kind of really a central bank in the kind of normal definition of the word.
Yeah, I agree.
Well, Don, coming back to the regional banks, we've spoken earlier about the independence of the federal system. Is there as much independence in the regional banks, or are they more susceptible to political influence?
No, they're not. Actually, maybe they're even less susceptible to political influence. I mean, they're appointed by the boards of directors with the approval of the Board of Governors in Washington. In my experience, it really was a two-key process. Both the board of directors at the regions, when they were picking a president, would be consulting with Washington to make sure that they were moving in a direction that would ultimately be acceptable. But once those presidents are appointed, they are independent. Now, this raises a very interesting question, which is in the U.S. Constitution, supposedly policymakers are appointed by the president and approved by the Senate in that honored way. These Reserve Bank presidents play an important role in policy, and they are not chosen by the president and approved by the Senate. This has been challenged in courts several times in several different ways. The last time it was challenged seriously was in the 80s by some senators who said, we don't get a say in these guys. And the Supreme Court very wisely said, you're lawmakers. If you don't like it, go back and change the law. We're not going to get involved in this thing. Now, part of this, there's an argument now, particularly in the Trump administration, that in order to make these people constitutional, they have to report to the Board of Governors, the constitutionally appointed one. And can the Board of Governors fire one of the Reserve Bank presidents because they don't agree with them, for example? That's never happened. All right. But it's one. I think we're supposed to be just discussing current events to some extent on independence, and there's a lot of concern about what the Trump administration is doing vis-a-vis the Fed. A lot of the headlines are about what it's doing vis-a-vis the Board of Governors, trying to fire Lisa Cook, one of the members of the board, for basically a traffic ticket or a parking ticket. I mean, a very minor infraction. It might not have even been an infraction, and trying to get rid of Jay Powell by bringing a criminal case against him that's clearly without merit. So the Trump administration has broken those norms that we were talking about, those conventions Paul was talking about that really protect the independence by going after. I said one of the protections for independence was appointments of longer terms that roll over slowly. Even the chairman is like, right? So, and often reappointed. So trying to fire members of the board, trying to force them out through criminal cases is breaking a norm that's never been broken before, even by presidents who wanted to exert a lot of pressure on the Federal Reserve. So Trump had the challenge to Federal Reserve independence is greater now than it's ever been in its history.
Well, it makes one ask, what is the protection for the norms, for the conventions?
I don't. I think that's the question. So I think if you get people who don't honor the norms and conventions, there's some pushback by the courts. So one of the things Trump tried to do is fire Lisa Cook for what he claimed was what he claimed was an infraction, filling out her mortgage application. That's in dispute. The Supreme Court at least there's a case in the Supreme Court. The court hasn't ruled yet, but when it heard the arguments, it seemed very skeptical of how the Trump administration had proceeded here. So hopefully in the Federal Reserve Act, it says a governor can be fired for cause. For the last nearly 90 years, anyhow, for cause has been interpreted as a major problem: cheating, fraud, obvious wrongdoing while in office. And Trump tried to define that down to something very small. So it feels like the Supreme Court, though we haven't had the ruling yet, will help protect that, at least for a while. I think the ultimate protection is in the legislature and the people. So one thing that is happening here, so when they brought this criminal case against Jay Powell, Jay went out and recorded a video that said that this is a pretext for trying. They don't like my monetary policy. He's bringing this case. It has nothing to do with my actions. Had my action that he alleges, which was not being totally truthful to Congress, and everything to do with what he wants. So, and I think very fortunately, at least one senator said that he wouldn't vote to advance a replacement for Jay unless that case was resolved with finality. And another senator, the head of the banking committee, said, "This is nonsense. This man did not lie to us. He testified as best he could. He didn't lie." So there's been some pushback by Republican senators. So I think the ultimate safety here comes in the legislators themselves, who I said, and setting up the Fed, recognized they couldn't be trusted with making monetary policy. And they knew the president couldn't be trusted with making monetary policy. They've got to push back. It's disappointing how little pushback there's been in a lot of fields in the U.S. by the legislature protecting themselves. But that's the ultimate. It's the people in the legislature that have to protect the independence.
So it's the politicians who are the ultimate safeguard, at least not ultimate, but in this context, it's the politicians, the people, the party against opposite independence. They will come and salvage independence. Just there's a bit of a paradox there. Do you remember Was there a similar situation with Paul Volcker in the 1970s? Was he under some sort of scrutiny for a similar kind of event?
No. So I would say maybe there was an case of Arthur Burns, who was under tremendous pressure from Richard Nixon, particularly before the 1972 election. And sadly, Burns kind of gave into that pressure. He didn't really clamp down on inflation as well as he should have, and then inflation came right back, and then there was more inflation later. But when Paul Volcker took over in 1979, he told Jimmy Carter, the person who appointed him, in his interview, he told Jimmy Carter, "You appoint me, I'm going after inflation. That's what we need to do. That's the job of the central bank. That's what I'm going to do." He recounts in his memoir that night after the interview with Carter, he called, I think, his wife and said, "Yeah, I'm not getting that job. He'd be crazy to appoint me." The next day, he was appointed to the position. So I think the Carter administration was a little uncomfortable with the way things turned out. I mean, there was a deep recession, which undoubtedly contributed to their losing the election. But I think it's a tribute to Jimmy Carter. He saw the need and he appointed somebody who told him straight out, "That's what I'm going to do." There is another Paul Volcker story in Paul's memoir, which is in 1984, another leap year, another election year. He was summoned to the White House by Ronald Reagan and met with Ronald Reagan and Jim Baker in the library of the White House, which he supposed might be because there wasn't any recording devices in there. And Jim Baker said, with Reagan sitting there, "The president instructs you not to raise rates this year." According to Volcker, Reagan looked uncomfortable, but I think maybe because Volcker wanted Reagan to look uncomfortable. And according to Volcker, he didn't say anything. He just left. He just walked out. And actually, he did raise rates in the middle of 1984, or he allowed rates to rise in the middle of 1984. So Volcker's nothing was going to deflect Paul Volcker from seeking price stability, including pressure from the president of the United States.
Was Baker the Secretary of the Treasury?
No, I think he was chief of staff maybe at that point.
Okay, all right, fair enough. Well,
so I just want to add something there, just in terms of when you're saying about this whole aspect of thinking, there is the laws, but again, these norms and conventions are really an important part, and it's not and you're saying who protects those? Well, it really is the public, at least in the Canadian system, is really, there could be pressures. The government could fire the governor, and it would there's a procedure and everything. But it's very important that people would know, and this is the aspect, and I think this type of podcast is relevant for getting people to understand the independence and the limits to it, such that if it was a case that came up, and there's been problems in the past, but that everyone would know, and knowing this is a government that decided to jump over and do something that wasn't the normal convention. And you'd hope that would pay a cost down the line in terms of election, because again, really want to keep this balance, that there really is an aspect that you want a certain amount of independence at the central bank, but still you want to recognize that we're in we want democracy to have its voice. And in some sense, the conventions to play that role. They're there to make it hard to change, but not too hard, that if you had a central bank that's not functioning well, maybe you want to change it. And so there's a little bit all this tension in the background. Finding the right institutions that allow you to do it are important. It's not clear that you necessarily think it's more democratically right to have it very without any question of what they can do. And like I was saying, not that the ECB is the same thing, but when you get it far enough, there's more of those questions. It's well, who are they accountable for? And at least for the Bank of Canada, it's still very accountable to the government in a final sense. And yeah, I think it's, again, it's a particular mix that we have in Canada, and those conventions play an important role.
Last question, then I'll turn the floor over to Quentin Innes to marshal questions from the floor. You've both mentioned that Congress and Parliament represent the people, but is there an information gap? Could or should the central bank be more forceful in projecting what it does? Does the average person know what the central bank does? And if they don't, they're not going to care. How many people can identify Tiff Macklem or Jay Powell? Who are these guys? Does the bank have a balance problem? If they start advertising on TV, we're the central bank, here's what we do, they may be accused of unduly influencing the public. But if they say nothing, they put independence at risk. Do either central banks have a dilemma here?
So I would go the opposite place a bit there on that front, Lawrence. It's kind of like there's a bit of a joke in terms of central banks, not all of them, but it's almost like this aspect that what you want is that people don't talk about the central bank. Okay, when it does a good job, it's kind of like inflation's on kind of moving. People aren't worrying about it. They're going around their business, worrying about the aspect of the central bank, and shouldn't be thinking about central bankers too much if the job is being done right. So the idea that you'd want to have that necessarily the central banker is kind of at the center, it's only when it's kind of crisis time, when things are difficult, that it's really there. But the best kind of feeling is actually when almost people don't notice the central bank does the good job in the background. Is the economy's working? There's a lot of other things. Once the prices are kind of stable, people can make the decisions, all those real decisions that have to be made that are difficult in the economy. So I don't think you want to necessarily have a central banker that's kind of going around and making it like, I'm very important. Get the job done and not, it's just keep quiet. And that's the kind of the relevant way. Anyways, I don't know if Don, maybe I went a bit too far, but a little bit kind of pushing that side. I often thought like we'd want to have a hat, make central bank boring again during COVID was the idea of kind of saying, get back to the time when it's actually inflation's under control and everyone forgets about the central bank.
Yeah. So I agree with that last point that the best time is when there isn't an issue, right? And Alan Greenspan famously defined price stability as when households and businesses don't have to pay attention to inflation. They can go about their business, as Paul was saying, making the decisions about what to buy and sell and what price to charge, et cetera, without worrying about the price level moving in one direction or another. I do think I guess I would differ a little bit with Paul in that maybe it's because of the worries about independence in the United States, but also in other countries too. I think the United States isn't the only country where independence has been a bit under fire. An effort. Central banks have greatly increased the transparency with which they make their decisions and announce their decisions and explain their decisions over the last, say, 30, 35 years. So until 1993, I think, the Federal Reserve didn't announce what its target was for interest rates. People had to infer it from its actions in markets. Alan Greenspan changed that, and he came out with an announcement, and those announcements grew in size, et cetera. When Ben Bernanke came into office, he took that transparency thing much further and published more detailed projections. I think he started on a quarterly basis, projecting long-term variables, as the long-term values of variables, as well as next year or two, and famously the so-called dot plot. So publishing what the members of the Open Market Committee thought would happen to interest rates in order to meet the Fed's objectives for price stability and maximum employment. So there was a huge increase, and publishing minutes of the meeting much more quickly. And Ben eventually went to four press conferences a year when the projections came out. Jay Powell took over and inherited that and went to 8 press conferences a year. He has a press conference after every meeting. That's not new. I mean, the Bundesbank before the ECB used to have a press conference after every meeting. And I remember as a staff member, another staff member went to Alan Greenspan and said, yeah, that's a great practice. You ought to have a press conference after meetings. And Greenspan said, no way, I'll just get in trouble, et cetera, et cetera. So I think, but a lot of the transparency has been aimed, understandably, at helping markets and to some extent academics understand what the Fed is doing. It's important that the markets understand because they're pricing the future. Financial markets bring the future to the present. So they're pricing the present. And if they don't understand what the Federal Reserve's or the Bank of Canada's reaction function is, something might happen and they would guess wrong about what the bank or the Fed would do, and they would move market prices in ways that weren't really helpful to stabilizing the economy and financial markets. But I do think there's something missing. The Fed has, and other central banks, I'm not sure about Canada, have made, I know the Bank of England made extra efforts to reach out to ordinary people, not just people in the markets or people in academia, engaging through, X and all those social media kinds of things, trying to simplify messages. Something is research. I know the ECB, I think, has a thing where they publish research. They put out a 2-page note or a 1-page note explaining the importance of the research at the same time. So there is efforts like that. But I think that actually, with independence under fire, if anything, those efforts need to be amped up. It's very hard. And I agree with Paul. It's great when everyone ignores inflation, ignores the central bank because things are going well.
And
but when they
bring
aren't,
it to the other, bring it to the other side. I mean, the transparency has just increased enormously, which is the difference between kind of even the idea of having fixed dates for having interest rate announcements. That wasn't kind of like, if you go in the past, that wasn't there. This is kind of a part of saying you can predict when the central bank is going to kind of change the interest rate. It's going to tell you. There's meetings, there's information in between, trying to give both the public and the markets ideas of where things are going. Most of the time, it's trying not to surprise things. It's actually trying to say how it's interpreting the view, how data will come in, how it'll affect things. This is what Don was calling the reaction function, trying to make that very clear. Now, in reality, what's interesting about the interest of getting people from different environments, in general, people from the kind of the market aspect, people from the financial market, they want to follow the central banks all the time. That's what they live, part of it lives off. The public in general, kind of when I was joking about the idea when it's boring, during those times, it's really hard to get the public to kind of want to listen about what the central bank, because things are fine. When things are going bad, when inflation goes bad, then there's really this kind of ramp up and kind of finding ways to explain. Even though there's a lot of effort, like at the Bank of Canada has been doing enormous effort to try to explain to people, but it's really people want to know when it's going bad, why it's going bad. When it's going well, they're not very interested in knowing why it's going well. There's a real kind of asymmetry between those two things. But it does mean that communication is important. Finding ways to explain things that in ways that people can understand is really important. Getting feedback and really knowing that the Bank of Canada, at least there's a lot of central banks, are really out there trying to get this information in general, kind of getting it from all these different parts, whether it's small firms, big firms, households, different things, bringing out all that information together, and that people have to know that it isn't kind of closed in and not kind of trying to get a sense of all that part to make a decision. And that, I think, is important, that people know how much effort that's being made on that front to try to get people's input from everywhere to help make an informed decision.
All right. Well, your last comments answered my question. So maybe I used the word influence incorrectly, but certainly transparency and increased volume of push out from the bank answers that. On that point, we've had 45 minutes of exciting conversation. I'd like to turn the floor over to Quentin Innes, who will marshal questions from the floor. Quentin, the floor is yours.
Yeah, I apologize, guys. My video is not working just now. We'll fix that as we go through. So thank you very much. I can't thank you enough for coming here and doing this because I think money is what people care about. Money affects people, and I think the majority of citizens out there don't fully understand the role of central banks and how it impacts on their lives. So thank you for coming on and explaining it. Um, Don, I really liked the way you started with the framing of stable prices. You know, central banks are there to try to maintain price stability, including the price of money. And Paul, I really appreciate your thoughts on communication, getting this out to people, and making sure that people have the sense that there's sort of, to use the sailing term, a steady hand on the tiller. I think people want to know that there is some kind of order in the chaos that we see around us. And for you as central bankers, it must be very, very difficult trying to sort out the wheat from the chaff and try to bring that order out of chaos. So with that as a framing statement, I'm going to pass the floor to Basir, who has a question about global risks and challenges. We'll start wide, and then we'll work our way narrow. Basir?
Thank you very much, Quentin. Lawrence, thank you very much, Donald, Paul. My question goes around current global challenges and risks are making the work of central bankers a lot more complicated. How does a central banker look at the world and what do they pay attention to? Thank you very much.
Well, I'm happy to start. It's kind of like, what don't they pay attention to? You have to pay attention to almost everything. So it's how to kind of take all that information that is so wide of kind of looking both, like we were talking about all the national things, you know, the regional things, but then there's all the international forces, getting all those things. It's really a very wide part and kind of understanding, trying to understand how people in different parts of our society are feeling what's happening, what's on their mind. You know, there's a lot of things that are psychological. Like I often joke a bit, like there's a lot of psychology in economics, and that's really a big part, not only kind of the hard data, but a lot of the soft data that you want to actually ask people. Are they confident? Are our firms going to invest, or they kind of think everything's going like to a mess, or they think, oh, things don't look too bad, even though things are, you know, right now you kind of have a war, you have all sorts of things. You want to get a sense. So it's both a lot of hard data that has to be taken into account, and on top a lot of soft data that, like I say, is, you know, kind of the impression that people also have. It's not only what's actually out there.
Yeah, so I think all central banks recognize that their economies are not isolated from the global economy. What happens in the rest of the world matters. And therefore, they devote a lot of resources. I know the Fed does, and I'm sure the Bank of Canada does also, to understanding the rest of the world and what's going on and what's likely to go on and how that's likely to feed back on their situation. So I think Paul put it well. What don't they pay attention to? So, but particularly, I want to focus on anything that would feed back into the domestic market, because their remit, the Bank of Canada's remit, is inflation in Canada. The Fed's remit is inflation in the US plus jobs in the US. So anything that's going to affect them, and the current situation, energy markets is a great example. It's obviously going to get a lot of attention, a lot of study from the central banks. So I know each open market committee meeting, the staff prepares a forecast. An important part of that forecast was their forecast of what's going on in the rest of the world and how that will feed into the prices and output in the United States.
And just to add a little piece on that, just to kind of note, there's all this information. There's a lot of communication also between central banks. So it's not like obviously we have the remit is very much a national remit, and that's kind of the whole aspect. But the central banks don't work as kind of like this kind of isolated community. It actually is one that is very cooperative, at least, you know, among major advanced kind of countries. There's a lot of continuous communication, a lot of links at all the levels, at the top levels, but are going through the staff. So there's a lot of information that flows through that also. So there's a lot of sharing of information.
And a lot of cooperation in a crisis. So, for example, the United States has so-called swap lines where they will supply dollars to a foreign central bank in exchange for that foreign central bank's currency, and then that will be swapped back again. Those have been around for a long time, but in the global financial crisis of 2008, that was expanded, and it was an important uh, aspect of stabilizing a very unstable situation. And that's where these contacts that Paul was talking about come in so handy, because when stuff was falling apart in the summer and fall of 2008, when I picked up the phone and talked to the deputy governor of the Bank of Canada, or the deputy governor at the ECB, or at the Bank of England, we knew each other, and we knew how to speak to each other, and we had a common language and a common understanding, and it really was very, very helpful coming to grips with that crisis.
Thank you very much.
Great. Basir, does that answer your question?
More than enough. In fact, I think there should definitely be a suspenseful political thriller movie that tells the story of central bankers, the challenges that they're facing, the crisis that they're solving, because I think that credit should be given. And thank you for all the wonderful work, most obliged. Thank you. And thank you.
Who should play Paul? I don't know.
We got Paul Gross up
mean,
here.
Central bankers could decide.
Yep. All right. I'm going to move to Kirill right now. And Kirill's got a more specific question about Canada-US relations.
Hello, good evening. Yeah, my question is more like, practical application. So, yeah, taking into account the current Canada-US tensions, do you foresee any issue with cross-border financial operation, for instance, US bonds held by Canada, or private investment regulation? And what role may the central banks play? How dependent are they here, in this time of momentary emotional decisions and stuff?
Well, I think financial markets are global. And although the current American administration has tried to put barriers in the free flow of goods across borders, so far they haven't, and there's been no hint of it, put any barriers to the free flow of finance. So I would be very surprised. I think it would be extremely destructive for capital controls to be put on either in Canada or the United States. And I think, and the authorities recognize that. Certainly in the case of the United States, it's the international reserve currency. The dollar is the reserve currency. There's a lot of discussion about, it might fade at some point or be less used. I think that's still not true. And I think the U.S. benefits from that. We pay lower interest rates because of all the demand for dollars than we otherwise would. Valerie Giscard d'Estaing, wasn't it, Paul, who called it the exorbitant privilege? So I think that the U.S. would be foolish to throw that away by putting barriers to capital flows. And while the U.S. this administration does foolish things, I think they're not going to do that. I think they recognize that would be a real problem.
And this is just to add a little bit there. I completely agree. I don't think there's any big problems on that front. And I'd even go a bit further. While there are some, obviously tensions between Canada and the US at this point, and different things that have to be negotiated, I'm not at the Bank of Canada right now, but I'd be very surprised that if the conditions of kind of discussion with the Feds have at all have that kind of tension. I think that kind of relation has stayed completely the same. It's probably working as well as it has always worked. Again, I don't know for sure, but I'm kind of like 99.9% sure that that's still. So there's really not tensions between central banks, at least.
Good.
I agree.
Thank you. Good to hear it.
Kirill, does that answer your question?
Yeah, I just maybe if the Canadian part, I just quick explanation because here in Canada you can hear about like business investment crisis, like Canadian investments went to US and US businesses are buying Canadian enterprises and stuff like this. So partially my question is about this situation. If say politicians decided to do something in
I
this
guess
situation,
I mean, we really want
can
to
the bank
distinguish
do
between
it?
what the bank's remit is and kind of like how far. I mean, the bank's remit is very much this inflation targeting of keeping things stable such that the other decisions get done and the kind of fiscal policy kind of has to do and kind of government policy on other fronts. Right now, obviously with trade tensions, there's a lot of uncertainty. So a lot of firms are not investing. That should be taken into account as the Bank of Canada decides on its interest rates and different things. But above that, of figuring out the right climate for investment, that also has to go a lot on kind of the fiscal policy and things that kind of go beyond just the Bank of Canada. The Bank of Canada is one piece in that, but it doesn't kind of do all things. And so it's always have to remember that it has a more narrow trying to get that this price stable such that the other decisions can be taken well. And so hopefully that allows kind of room for fiscal policy to be run in kind of the best way, and trade policy also, and get the negotiations on those fronts. And yeah, it's not the Bank of Canada that goes around and does the trade negotiations, for example.
Mhm. Okay, thank you.
Okay. So, two more questions that are out there, sort of floating around, and on the topic of volatility, trying to keep order out of chaos. We have a continuous sort of independence movement in Canada, in the form of Quebec, and now we have a burgeoning movement in Canada in the form of Alberta. So, Don, I'm sure that you dealt with this with Texas on a continuous basis, in your time in the States. But what are your thoughts on the impact of sort of separatist movements writ large, across the world? What's the impact in terms of central banking on that?
Well, I think you put it a bit in terms of the volatility. I mean, whenever you're putting uncertainty, well, in the system, obviously any separatist movement creates more uncertainty. There's kind of big changes that could happen, and we don't know. There's the different probabilities you can think about how it plays. It always creates uncertainty, and uncertainty is something that just weighs down on economies. That's just one of the aspects that generally weighs down. And for central bank has to take that into account to what extent it is weighing on the economy, kind of reducing people's demands, different things. And that would feed back potentially in interest rate decisions to try to keep, again, trying to do what its job is to kind of help the economy be stable in terms of the price level, and then letting the others do the other parts, and not to the central bank to address the direct parts of the separatist kind of feelings and things. But it does need to take it into account and kind of do the policy that is needed to try to keep the economy working and to try to create this kind of stable prices, and that's the best it can do.
Don?
I don't really have anything to add to that. I think to reinforce a point Paul just made, I think it's important for the central banks to stay out of those discussions. And I would say the Bank of England, under your current prime minister, didn't entirely stay out of those
Mm.
discussions. He weighed in on Scottish separatism, and he weighed in on Brexit. Now, at the request of Parliament and the Prime Minister, etc. But I think it's best to to try and hold off those kinds of things and keep the focus more narrow when you're not when you have an arm's length relationship. All the central banks are part of democracies, are ultimately responsible to the people, ultimately controlled by the people through the appointments process, if nothing else. And so there are limits to independence. And the framework for independence is often that elected representatives give the target, and the central bank is independent in movement of the instruments like interest rates in order to achieve the target. So we need to recognize there are limits on independence, but I also think that one of the avenues of attack on the Federal Reserve and Federal Reserve independence has been that the Federal Reserve has gotten involved in some things that aren't really central to its core mission. And climate change, it didn't really get involved in climate change, but it's accused of it. It structured its monetary policy framework to take account of disadvantaged groups and trying to help disadvantaged groups and things like that. So there at least there's a perception that the Fed strayed from its core mission. And I think one protection for independence is to stick with that core mission as best you can.
Bankers should stick to their knitting.
Right.
Yeah, it's that old saying that they had for the civil service, fearless advice, loyal execution. Right? I mean, your job as a central banker is to manage the money supply, Don, and that's how you retain your independence, is by staying in those lanes and working those issues and not reaching down into other social issues, which banks may have influence over, but not really your bailiwick.
And to Paul's earlier point, which I totally agree with, not only managing the money, but doing it well in a way that provides price stability and economic stability.
Okay. We're at the top of the hour. Gentlemen, I think we're running out of questions here. I did have one last one that you might want to tackle. I'm not sure if you want to broach it, but it's about cyber coins, cyber currency. So we've talked around the idea of central banks having this role in price stability. Is there going to be an impact with cyber currencies on price stability? Is that something that central banks will not be able to control?
Well, we can get to different parts of this, and right now, we can always think, somewhere very far off where all of a sudden it would kind of move off. The reality is, cyber currencies are just not being used for transactions, and so this is not like a big part. There's a speculative part in that world, and that's what it's being used now with stable coins. But stable coins are very much within the system, so it's a very different aspect and kind of how it's working. So I don't see that as a big problem. There's an issue that's an interesting one, is whether central banks should put out the equivalent of this stable coin, is kind of having a currency that would be available in the same way. There's been discussions, and certainly the Bank of Canada has been discussing that. It hasn't. So a final decision on that would be done by the Ministry of Finance. If it was being decided, that wouldn't be something that the Bank of Canada would decide by itself. But at this point, it's been a bit more put on hold. There doesn't seem to be a big demand for it. There's been surveys in Canada kind of asking whether people think there's a big demand for having that. People seem to be happy with the system. Now, we'd want to have the payment system a bit faster. So there's been improvements, and there's kind of improvements that are still coming on the payment system. So yes, there's lots of debates there, but I'm more thinking that's a lot of the parts, especially on unbacked cryptocurrencies. It's much more that speculative market and kind of keeping an eye on it, and how it could kind of just go bad and maybe have some ramifications for financial stability. And that would be more the issues that I'd kind of be worrying about there.
I agree with Paul. I think it's not really a monetary policy issue. It could be a financial stability issue. And stable coins, I would include in that, because as reserves, the stable coins can hold uninsured deposits at banks. they're not supposed to pay interest, but the stablecoin issuers are finding ways around that. So they could attract funds from the banks, which might have an effect on their ability or the quantity of loans they can make, that kind of thing. So there are some sort of indirect, really financial engineering kinds of issues that might occur. But right now, there hasn't really been a use case in my opinion for central bank digital currency, at least a convincing one. In the U.S., there's a lot of opposition to it because people are concerned about the central bank having a lot of information about what you have in your bank account and a lot of control over that. So Jay Powell has said often that the U.S. is not going to, the Federal Reserve is not going to get involved in this without the legislature giving it an explicit go-ahead. And I think that's a good position to be in.
So you're waiting on the legislation to make that happen.
And there is no push whatsoever in the legislation for that. Nothing.
Okay.
In fact, there's opposition to it. The Republicans tried to put something in a recent bill that absolutely forbade that. So it's not going to happen in the U.S.
Not anytime soon. Okay, thank you very much for that. There's one late breaking question here. I will pass the floor to Claire Burke in a moment. But just to frame it, I think some of the discussion that's been happening, kind of the larger macroeconomic stuff, is about AI, AI replacing people in white-collar jobs. We've got robotics replacing people in blue-collar jobs. So what happens in a consumer society when your consumers can't afford to consume anymore because they're not working? And Claire, I think that sort of hits to the heart of what you're going to say. So I'm going to pass the microphone to you.
Thanks. This has been very informative. I really appreciate all the stuff that I've been learning here tonight. I guess my question is basically along the lines of what we're seeing with the war and stuff is so much deflationary activity. You know, there's going to be this downward spiral of people not being able to afford things. People are going to get laid off. Companies are going to close. We're only just beginning to see the cusp of this. This is going to go on for months and years. I'm just wondering what you guys might think about a universal basic income, kind of like we saw here in Canada with COVID when we got CERB. It really helped kind of keep some people afloat and able to pay bills, therefore, keeping the monetary flow of money going. So just kind of thinking, kind of wondering what you guys think about that. Thanks.
Yes, I don't really.
Go ahead, Don.
I don't really have a view on universal basic income, but I want to address the premise of your question, which was that AI is going to start replacing people. We don't know, actually. I just heard some presentations on this at the end of last week. So far, it looks like AI is changing how people do their jobs, maybe some replacement, but mostly it's changing the shape of the job rather than the number of jobs. And our experience with these kinds of widespread technological innovations is other jobs pop up. So it's entirely possible, and I know there are discussions out there about whether this will put a lot of people out of work, but I don't think there's any evidence that it's doing it so far, at least not in any size.
Sorry,
and other jobs are being created.
Yeah, sorry, I just wanted to be clear. It wasn't about AI for me. It was more about the instability of what's happening with the Iran war.
Okay, I'm sorry.
Yeah, my apologies.
Quentin introduced it with an AI thing.
Yeah.
So I think that presents the central banks, the Bank of Canada and the Federal Reserve, with some very difficult choices. These are called supply shocks. They're a reduction in the supply of something, in this case, petroleum, to the global economy. And that means that prices will rise, the price for petroleum and the price for, as we're hearing, the prices for fertilizer, helium, all kinds of inputs into other things. So there'll be price increases, and those price increases, given our income, will make us a little poorer. Now, how serious this will be, and that's a dilemma for the central bank, because the central bank can lean hard against those price increases, but that'll just make the adverse effects on income all that worse. So for the most part, central banks try to cut it through the middle, try to hope that it's a one-time price increase and not a continuing level of inflation. Keep an eye on secondary effects, inflation expectations, wage increases, and whatnot. So it's very difficult, because it really is a bad shock to the global economy. I think this will depend on how long it lasts and how long those straits remain closed, and how much damage there is to the refining and pumping and fracking, the infrastructure that moves the petroleum around the world.
And just to kind of, again, to just add on that, I agree with Don. Certainly, like you said, this is a difficult period, and kind of, you go through, and for central banks, this is really always hard knowing how to adjust to it. And the general idea is that this comes through, and so if it stays in certain sectors, like it's just oil going up, you can kind of look through and kind of figure out, hopefully, of not having to increase interest rates, because exactly like you're saying, already things kind of slow down because of this. So in some sense, you'd like to decrease almost rates to kind of help the system kind of keep up. At the same time, what you don't want is this whole aspect of getting inflation starting kind of a process that goes across, a bit like we saw through COVID, getting into more sectors and more things, and then getting into wages and getting prices, and everything kind of keeps on moving. That's really what everyone hates. So you really don't want that outcome. On the other hand, you don't want to kind of create a recession either. And so you're hitting in this middle ground and hoping of saying, really kind of, hopefully things can land not too bad, but we don't know. And so this is what we're going to be seeing over the next several months, is how this is going to play out. And we'll see central banks both trying to say they want to support the economy, but also not let inflation take off. And that's really that tension. And we'll kind of repeatedly hear that, and we'll see how things, and depending on how much it lasts, not only how much it lasts, how it gets extended. Like right now, when we're seeing more things than just oil and gas kind of go up, that makes it wider. It really creates more problems when we're seeing fertilizer. When you get into food, all that you start really being worried about that inflation part. And that would be a really sad situation, because it might require increase in interest rates, which almost everyone would dislike at that point.
Claire, does that answer the question?
Sort of, to some degree. Like, I understand sort of the basic fundamentals of, the discussion that you're bringing about, but I think my question was sort of more specific to having a universal basic income to help people cope with the cost of stuff. Like, even just having here in, I'm originally in Toronto, and then, I moved up to Pembroke. It's a small town, sort of between here, between Toronto and Ottawa. And even just the gas prices here have already gone up easily by 40–50%. So I guess my question really is, how does the end consumer, the average person, deal with being able to pay for all these expenses, when obviously minimum wage is below $18 currently? There's no sort of solution to fixing the fact that we're not going to get more money, but things are going to skyrocket. So I guess the basic question is, how do we cope with that? And as I mentioned earlier, in Canada, we had CERB, like CERB. So I'm just wondering if at any point a universal basic income might be a solution to, even if it's a short-term solution, to help sort of get people through this crisis period. Thanks.
Well, I just give my own. This is not so much as a central banker, as my own impression, having looked and kind of, thought about basic income like that. It's a very non-targeted program. It costs a fortune as a way of doing it. And if you want to kind of have something that is actually fiscally possible, you want something that's much more targeted, kind of giving money to everyone. And there's some people that are doing very well. That's what basic income does. It gives to everyone. That's even more than the CERB part. CERB was requiring that you'd be unemployed at that point. So it was actually much more like a program of expanded unemployment insurance at that point. The basic income is really giving money to everyone, and how to pay for that is a really huge thing, because you're giving it to everyone. And so when I think about things like that, I'd be much more favorable of thinking of more targeted programs to really help the ones that need it at the point, as opposed to untargeted programs
Oh,
like that.
I agree with you there completely. Thank you.
Don, anything more to add?
No, I have nothing to add to that.
All right, gentlemen, I think we'll wrap it up there. I'm cognizant of time, and you're 2 hours ahead of us on the East Coast.
Right.
So I will now pass back to Joe to wrap up. Once again, thank you very much for your time. Extremely valuable, and we're really lucky to have two such distinguished and experienced guests. Joe?
Thanks, Senator. Thanks, Quentin. Gentlemen, I'll echo Quentin's comments. More than outstanding. It's not often we get two experts of your standing in one place at one time, but tonight is the exception, and we are very grateful. On Don's last point, I'll refer everybody to today's Bloomberg news. There was a good piece about a very heated exchange between the president of the European Central Bank, Christine Lagarde, and Scott Bessent, who I believe is the U.S. Secretary of the Treasury.
Yes.
One saying, we have got a very long-term problem here concerning the impact of the Iranian war, and Mr. Bessent saying, not a problem. But then Mr. Bessent has the advantage of, I guess, quite a number of sizable strategic reserves. I'm not sure the same situation applies to Europe. But on that note, let's close it off and say thank you again. I hope we can invite you back again sometime for a sequel. In the meantime, I would like to invite everybody to show up roughly this time next month, when Chris Ankerson, who teaches at New York University, is going to be talking about the role of civilians in war and whether involving civilians occurs and whether there are perhaps some grisly advantages to it. I have no idea where he's going with this thesis, but it sounds exciting, and I hope you'll join us. In the meantime, let's sign off and say thank you very much and have a safe evening.
Good night, all.
Thank you. Bye.